Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Friday, August the 15th. The year's 2025. Let's talk trading. Time for the weekly wrap-up. These videos are for educational purposes only. Your results may differ from mine. As always, I really hope you had risk management in place so you never lost more than you were willing to lose on any one single trade or during any one trading session. So we look at the weekly. We can see from the dashboard all the weekly gaps have filled. We're 109 pips above the weekly open, 40 off the high, and 155 off the low for the pound dollar. We zoom out to the month. We are 354 pips above the monthly open, 41 off the high now, and 412 off the monthly low. We look at the opening ranges. We can see we are above the weekly open range, which is above the monthly opening range, which is above the yearly opening range. And we take a look at the year. We are 1,043 pips above the yearly open, 235 off the high, and 1,454 pips off the low. And notice we have not pushed the yearly range this month. In fact, we're 235 pips below the yearly high. But we still have a couple of weeks left in the month, so we can see what will happen. Inside bar 8 days ago, we're well above that. And we're above the monthly inside bar from 19 months ago and the weekly inside bar from 33 weeks ago. Speaking about range, the pound right now is only at 52 pips range. We have 3 pairs over 100, and the pound yen is leading, the beast. But we also have the dollar yen coming in at 113 pips. We are above the daily open. You can see back in the Asian session, we shot way above it. And for the rats, the red rats look like they've feasted a couple of times here. You can see here we're using the M15. There's a lot of upper wicks here. And the smart rat zone was at 135, call it 63. We're about 10 pips below that at the time. The original rat called for a short at 35.55. So you can see here the red rat zone is closer to the high than the green rat zone, the smart rat, closer to the low. So you can see there's only a pip and a half difference between the green rat and the smart green rat, whereas the difference is a little bit higher. We've got a 7 pip. Let's see, the difference between those two are only there's 13 pips. No, the difference is 7.9 pips. So, but that's, recalculating those zones dynamically like this gives you a better opportunity. Bambino Flex Indicator said to go long, but the pivot trading plan said near R1 and near the pivot was short. Well, shorting near the pivot didn't really pay off, maybe a couple of pips there. Shorting near R1 definitely would have paid off. You'd be about 20 pips to the good right now. But we did take out that daily pivot. Let me go back here just a second here. We've missed the pivot from 2 days ago. We missed a pivot 6 days ago, and we missed a pivot 9 days ago, just to let everybody know. For the week, we missed this pivot, this weekly pivot. by, looks like by about 13 pips. We missed the pivot 5 weeks ago also. For the month, you can see there's a bunch of pivots way up here. But since we have the chart expanded, we missed the monthly pivot 5 months ago. In and out of the lower wick zone, it just went to the north and then in and out of the upper wick zone here. And one thing I noticed, and I just noticed it yesterday, and I haven't quite put it into, I guess I put it into words, where if you look at these wicks up here, it has to do with the wicks being covered or uncovered. And I kind of noticed something where when you see this happen on the upside, you see 1, 2, 3, it's like you're going to get a drop. Or you see, and you can see here how that happens, but I haven't put all the pieces together, so it might take me some time, but I think I might be on to something else here with the wicks because, as I might have mentioned earlier, I had some traders come to me and they want to know about trading and if I'll mentor them and all this and all that. And, I understand what they're asking, but they're looking for the solution in the wrong place. Um, and so I just like to try it and caution people, using something like the wick zone can be very profitable. But once again, you have to make sure you have your money and risk management in place. Um, and it was funny. There was somebody made a comment on the video, something about back testing. And I said, I've been doing this for decades. I'm so far past back testing, which once again, I think back testing is for the birds. Simply because the reason to back test, especially if you're back testing code, is to make sure your code executed when it was supposed to and didn't execute when it wasn't supposed to. Because if it's doing something and it's not supposed to do it, or it's failing to do something when it's supposed to do it, you got a problem with the code. And that's the only reason for back testing. I don't back test looking how much money I would make. I'm saying, no, did the code function properly? The only way to test something is to practice and to get some skin in the game, especially if you're manually trading. If you're writing an EA, yeah, go ahead. You can back test it all you want. But the problem is when you put it live and there's things that you think happen on the chart that really don't happen um, in real time because, price wiggles. Even if, let me jump ahead here. Even if we look at a 1 minute chart, you don't know how many ticks are in there. You don't know how exactly this price moves. So it looks like, yeah, I could have gotten in there. Well, maybe not. Maybe price blew through that point so fast, even with the EA, you wouldn't have gotten in at that price. And depending on how you wrote the EA and its parameters and its tolerances, it would have just not taken that trade. Or there might have been some kind of fat finger thing and it puts you in a trade or it takes you out of a trade because of something that you wouldn't have been able to respond to because it happened so quick. So that's just one of the things you have to look at and just be realistic about it. Let's see, where were we? And like we were looking here at the wick zones. And once again, okay, we're at actually 73% of the time price isn't staying in the wick zone. That's still, Vegas would just kill for these odds. They just really would. Okay, looking at the smart ranges, 196 pips a range this week, 50 percentile. We broke out of the high by 136 pips. We did not break out of the low. High minus close at the time 40 for you red rats, and close minus low 156 for the green rats. Weekly open crossover traders, high minus open 149, open minus low 46. Once again, these horizontal lines that don't move. Looking at simple price action chart on the 30-minute, you can see here we've been under indicator 2. We had some inside bars, some outside bars. You can see we broke out of the low of the last hour, but crawled back in. And I was talking with Walmall the other day, and we were talking about how some people say out of 1 minute charts noise. And I always say, anything other than a tick chart's data compression, you're trying to say these trades aren't valid. It just doesn't make any sense when you really think about some of the nonsense people espouse, that they try and sound smart. Back to this 1 minute chart, we had a high or low trade trigger. I'm sorry, a lower high trade trigger right here. And you see it ran up about 3 pips. You see that big gap right there? And so guess what? It has to come back and fill it. I see these gaps, like there's one right here. I can't tell if that filled. Here's another gap that filled. And sometimes you could just almost play these gaps on the chart. You see a gap and you figure, okay, that's going to happen, and you just kind of look at the price action, and then you wait your turn. So like right here, price shot up, tried to make a new high, failed. You see you're in the 50s here at a 1 ball. And for me, 1 balls mean if you're in the trade, get out. But sometimes 1 balls will become 2 balls, and you might give it a chance to breathe, but I'd rather be out and be mad, out with a profit and be mad, than be out with a loss. So I take those pips and grab them while I can. But once again, if you see something, you find something, then you just put a little system around it, and then you take advantage of it. Like here, looking at the EMA differences, here from H4 on down, it's pointing at a downside. So which way to trade? Once again, 453 pips for the month. We haven't pushed anything, so no need to go back over those. And let's see. At the month, previous bar was an outside bar. We're between the wick zones. Buyers strong control. For the week, buyer strong control. We're above that previous upper wick zone. There's still a fade to pivot sell here, but that's probably not going to happen today. And a higher high, higher low. And we look at the daily. Close crossed above the pivot, lower high, higher low. That's an inside bar. Prices between the wick zones. And let's see, we're below the previous mid. So that's about it on the analysis. So, fellow traders, once again, if you have any questions, feel free to ask. You can email, you can post them on the videos. But I want to wish you a fun and safe weekend. And as always, when you're at your trading terminal, platform, phone, laptop, desktop, whatever it is you're trading on the phone, talking to your broker directly, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.